Good morning. This is the daily debriefing for February 9th. I thought I'd go through the chat room and just give you a sense of collaborative learning and then hit a few of the highlights. It starts off in the morning session with the Euros. DAXBot is an automated market assessment tool that Jeff Boccaccio and Sonal have developed to provide alerts for a wide range of subjects using various measures like the frog box and hybrid frog box as a way to quickly find trading targets. Looks to be very, very promising. These are all the folks that appear today. Thanks for their courtesy in sharing their live learning. And then the files that folks have uploaded at various times throughout the day as trading case studies. I'm not going to follow all these in detail, but these are the folks developing their trades and doing crosstalk and sharing insights into the market. This is one from early in the morning where I posted the previous day's lessons learned. You see the DAXBot is given some assessments at 3 a.m. In the DAX. It hadn't broken a hybrid frog box either way, so it's shaping up to be a narrow range day, which shapes the kinds of patterns we're looking for. Again, DAXBot, what a nice way to reset your frame of reference. Some discussion on biases. So these guys have a nice rhythm back and forth, scanning their various sectors, cross-talking, confirming, triangulating. Here's one from Daniel. A nice trade frame here. A breakout from a hybrid frog box up. A nice cash, and now he's setting up a reversion. Excuse me, reversion to the main trade. This is one that can go in either direction. Nice gap up, find support above yesterday's close. 1, 2, 3. That's a possibility. Finding that in the morning session, XLK, that's technology, is leading the way. We were talking about how volatile the markets were, and Jeff had done a quick study on the risk Z. Looked back 20 years and found that the risk Z readings of the past couple of days have been among the top 10 most extreme readings. That's just a statistical measure of how wild and crazy this market has been this week. Here's a series from me. This is on diamonds. So we have this red line was a swing trade stop and from a previous day, and so we're below that. So my bias is downward, and so downward sloping 270, Z3P, breakdown short, extreme move, 1, 2, 3 cash exit. You notice on the MACD histogram, get the crossover outside the river. That's when I begin stalking. You have the PSAR switch from the upside to the downside, so I'm long. Second position, cash. We're still below this line, downward slope, so stop and reverse. Excuse me. Second position, if this gets you out, which it could, then this should get you back in, and now you have a really nice move from 239 down to 235 and a half. So that's 350 Dow points. Notice these signals are not as significant in here when you have such a tight cluster on the MACD histogram. These little oscillations are not significant. The ones that are more significant are the ones where we have an unambiguous move. In this case, this short from 240-ish down to 235. So that's a $5 move, $4 move, $4 move. And these start from breakouts from the 3 pinch. Really important lesson. Important lessons from Charles here. Short in the proper way, cashed. Opportunities to have gotten short again, and then various exit strategies that applying his rules were here. He was out of bullets at that point, but the trade frame is instructive. This is one on Devon Energy. This was a stop loss from the previous day, a hybrid frog box breakdown, short, and just riding that, and then with it moving the stop to here. So just an orderly move, using the PSAR as a guide, going in the trend direction. A downward day, and energy's a weaker sector, and Devon is weaker than the energies. This was Glenn pitching in with a very nice trade in Devon Energy. This is on the swing trade. This was a short with an initial stop. Correction, I think this was long, short, stop and reverse, beautifully played. And he's got this one, and he's been marking it all the way down using 1 ATR. We went back and examined why we should get short a second time here, and a second time here, and a third time here. All consistent with the MACD histogram. So, I mean, I like this one, but I love this one because this is where the break, and then the break occurs here, the MACD below the dotted line, below the zero line. That's why this is a must short, and these are reinforcing. 10R on the initial position, 18R if you add the positions as we teach. This was energy, intraday trade, hybrid frog breakdown from the high, and then this is that PSAR flip, 30 minutes into the day, hybrid frog short, collapsing dragon, second position, collapsing dragon, third position, they're stopping here and being ready if it breaks down below here for a fourth position. If this gets you out, I don't object to that. This gets you in. If this gets you out, and I don't object to that, this should get you in, and not later than here. So respect the PSAR, respect the direction of the day. It takes a lot of people and a lot of money to change the slope of that RL270. Respect that direction. This is a long on TZA, which is the inverse of the Russell. Breakout above the zero line, long. Switch of the PSAR, cash. The slope is up, long, because of the switch in the PSAR, and uptick and crossover in the MACD, fractional. Re-entry, nice win, too slow, should have been here, but had a sort of a belief on this one. Re-entry, scratch. And then there was a reversal right around here in the afternoon on Friday. While I was making the chart markups, there was the price ended up coming down through here. So that's why this is important to cash that one. And I'm using this as a reference line to the slope of the 270 as a way to try a new entry. Afternoon trade. Now the afternoon of Friday was a strong reversal. Remember that this was diamonds all the way down from 240 down to 235. We've seen those. Here's the uptick, the crossing of the zero line, so you get a long bias here. So you get long, not later than here. You can get long inside here, not later than here. 50-cent stop, 235 to 239.60, another $4 move, and then respect the PSAR exit, which comes at the same time. This was Glenn's markup where he studied the additional entries with markets money. Here's a VXX PSAR case study. The yellow circles are where the PSAR suggests a change in direction is imminent. So you have this uptick and this flips over, could be a down move. And then later, about 10 bars later, you get a confirmation of that in the blue bars when the MACD line crosses the zero line. So this is where you can stalk an entry short, and you got to be short not later than here. At least your bias has to be here, right? So you can be short from 56, even 56 and a quarter, or not later than 55 and a quarter, but that's already a 2% move. This was a possible reversal, and if that's not a bad place to cash. That's where you get this crossover outside the Z1 river. But then that should get you short again for another nice move. And you're short all the way down to here. A reversal. This is a nice cash. That's a long. As like a P1 or an owl. And then cashing in here and getting short. Cashing, getting long not later than the crossover. Now notice you have a short bias all the way from here all the way to here. As it starts getting sideways and gets a little choppy, right, that's the cost of doing business. And notice the convergence of all these indicators here in MACD and the narrowing of the river channel, and then emerging from that channel. And that's this gets noisy. That's where you get the long side bias, though, right here. So you could be long, cover, short because you're below the RL270 and sloping downward, and the zero line gets crossed by the MACD. That's a quick snapshot of the day in the Dow on 1 minute, and that's the move we just looked at, the reversal to the upside. Daniel does a study of the PSAR crossover exit just using DIA over the last few days. Powerful. I'll let you guys study that. There were some folks that were trading Mexico and treasuries, and so I put together a little quick study here. And starting with the MACD histogram, where you can see you have a long bias starting here because crosses to the upside. You have a long bias until it crosses below. Then you have a short side bias all the way to here. Then you have a long side bias. And just notice that this is a really good entry short because you have a crossing of the zero line and the PSAR just flipped over. So you can get short here with a stop right there, maybe 40 cents. And you have a nice move, about 2R down to here. And you're short this whole time. And this is a place where you can logically cash because now you have the crossover outside the river and that little uptick. And you have that little spike in here, so cover. You can stalk getting long here if you wait for the MACD line to cross the zero line and wait for the long bias to confirm. You don't get long till about here. So this is the difference between like a P1 and an owl entry here, and then waiting for the bias direction. And this would be a logical place to cash and then re-enter long. So the MACD histogram PSAR combo is a nice combination. So that was Mexico on the 5 minute. This is Treasuries on the 5 minute. And again, I'm just applying the same logic. These are things that you should study. And here's Treasuries on the shorter term 1 minute. I'm not going to read through all these. I'll leave these for you to study. But these are where the biases, the directional biases change. And you actually do get a nice, dollar move inside the Treasuries, which is a pretty good intraday move. And then a short side bias in here is tradable. Here's a couple from Bob. So he's looking at Caterpillar on the daily. And this is where the PSAR shift occurs. Notice how nicely that PSAR gets you, the Z3P breakout gets you in with a stop down here. And you ride that PSAR all the way to here. I mean, this is a move from 140 to 170 over a month. And then does a very nice job of telling you that run is done well before the pain and suffering. And then, as Bob would say, nothing good happens after the PSAR crosses the zero line, or the MACD crosses the zero line. VXX on the daily from 55 down to 25 in that last quarter of 2017. All the places where you can resume getting short. These are pockets. Then on January 16th, breakout to the upside. Then the crossing of the zero line in here. And you will recall this is from an earlier chart. This Z3 pinch breakout is where we got long in here on the 29th. And rode that one to victory. All right, so that's the daily debrief for the 9th of February. Well done, guys.